Good morning, and welcome to episode 248 of Getting Rich. I'm your host, Rich Chekin, president of Asset Strategies International, and today is Wednesday, October 29th, 2025. Well, conflicts continue to rage across the globe. President Putin has stepped up his offensives in and around Kiev. Netanyahu in Israel has ordered forceful responses to alleged violations of the ceasefire by Hamas in Gaza. President Trump is set to speak with China's Premier Xi Jinping in hopes of putting together a trade deal, or at least an easing of trade tensions. This on the heel of a trade deal he has agreed to with Korea just yesterday. In Argentina over this past weekend, Milei has won the midterms with a resounding referendum on his libertarian and austerity measures. Here in the U.S., consumer sentiment is down. Respondents cited both concerns over trade as well as the continued government shutdown here in the U.S. And that shutdown really has no end in sight. The Democrats and Republicans continue to blame each other as the SNAP, or Supplemental Nutrition Assistance Program, funding is set to run out on November 1st. Today is FOMC Day. Chairman Jerome Powell and the Federal Open Market Committee will meet to discuss and make a decision on cutting interest rates further. The market widely expects another 0.25% rate cut here today. The week and a half sell-off on gold and silver seems this morning to have rebounded and abated. My question to you is, do you think that is the end of the pullback? I'd be willing to hear your thoughts on that, and I'll share them next week. But in the meantime, let's take a look at the numbers, which might be surprising after that week and a half sell-off. Gold is actually up 0.1% from this time last week. It's trading at $4,024.20 an ounce. It was $4,019.30 last week. Silver's up almost 1%, 0.9% at $48.31 an ounce. It was $47.88 last week. Platinum is up 4.5%, trading at $1,613 an ounce. It was $1,544 an ounce last week. And palladium is up 0.8%, trading at $14.33 an ounce. It was $1,421, or $12 lower last week. With silver outperforming gold, it's going to take less ounces of silver to buy that ounce of gold. So your gold-silver ratio this week is down slightly to 83.3. It was 83.95 last week. And the dollar rebounded to where it was a couple weeks ago, falling slightly to 98.83 on the legacy index. It was 99.08 last week. So the question is, are we done with this pullback in gold and silver? You know where I stand on this. My first question I asked when we saw this pull-off start a week ago, or almost 2 weeks ago now, Friday, was what fundamentally has changed for gold and silver to warrant the price change? And the answer is absolutely nothing. We have not hit indicators suggesting the end of a bull market in price, duration, interest rates, dollar strength, sentiment, geopolitical stability, domestic stability, Dow gold ratio, gold silver ratio. The list goes on. Sentiment. There is nothing that is pointing to an end of this bull market. And as I've always said, until we see Congress with a concerted effort to balance a budget, gold is going higher, because the only way to fund over-expenditure or overspending is to increase the money supply, weaken every dollar in circulation, and make it take more dollars to buy anything of value, to include gold and silver. So we are not done with the bull market. We may be done with the pullback. In either way, these pullbacks are to be embraced until Congress changes their ways. And we'll talk about this and many more things starting Sunday in New Orleans. Brian and I will be heading down to the New Orleans Investment Conference. We'll be there Sunday through Wednesday. This is a 51st annual conference. Either Michael, myself, or both of us have been at every one since the mid-70s, and we encourage you to join us. It's not too late if you want to join in person or virtually. Just go ahead and follow the link in the description section under this video. As always, we want you to go ahead and follow us on YouTube, subscribe, like us, send us your comments and questions. Let me know, are we done with this pullback in gold and silver? We want you to go ahead and follow us on social media. Take our twice weekly, always something interesting alerts and our once monthly information line newsletter. And in the end, don't ever forget, getting rich starts with keeping what's yours.